Join the conversation
with Richard Dean, Brandy Scott and Tom Urquhart.
You're listening to the Business Breakfast on Dubai Eye on One.
Well, we are smiling extra widely at our next guest. Firstly, because he is actually in the studio, and secondly, because he has done what we absolutely love, which is come in to announce some data first with us. PR people take note. Property Monitor is about to release its monthly market report for October, and it's not all boom times. We have Property Monitor COO Zhann in the studio to talk us through it this morning. Zhann, it's lovely to see you. Actually lovely to see you.
Brilliant to finally be in studio and in person, guys.
Actual guests, can't beat it. And this report as well is different from what we've heard, the rhetoric for the last 12 months. Your report suggests that the market is showing early signs of a bit of cooling. What are you seeing?
Yeah, we definitely are. So let's preface it with the market is still good. Right? We've come out of the market bottoming out 12 months ago now. So it bottomed out last November. We've gone through 12 months of price appreciation month on month, peaking around June earlier this year, about 2.5% month on month growth, and then slowly tapering off since then. So last month's the first time we've been under 1% month on month growth since the turn of the market. So 9.95% last month, slowly tapering down. And what we're also seeing is transaction activity change. So that's one of the big things. So normally every market's got seasonality, right? You have your highs, your lows, busy times, slow times. In Dubai, the busy time pretty much starts end of August. So August, September, October, we see September month to month, October, and we keep seeing growth. The inverse is happening. We had an incredibly high August, which would be the slowest month of the year, and since then transactions have been tapering off. So that coupled with prices decelerating and transactions declining as well month to month when we expect them to be busy are some of the first signs of a market that's finally cooling off. And it's a good thing. We don't want to see a market run away. Otherwise, it's not going to be a long, drawn-out recovery.
Well, look, you've got extensive experience in the real estate market, global real estate market. What's your take on it, Zhann? I know you've got a theory.
Always a theory to it. Transactions are slowing down for several reasons. There's not been as much developer inventory in the market, but there is a lot coming, some very big projects in the pipeline. But we've also seen where the market started to recover. It was villas and townhouses. We've seen ridiculous growth in these. Now it's gotten to a point where the gap between buyer and seller expectations just can't be met. Buyers aren't willing to come up an additional 30% on last sales. That market's stalling. So the people that needed to sell or wanted to sell, they have. The others that are on the market, they're simply on the market, they're not in the market. They've priced themselves out.
Does that mean that the sales that we've seen recently are overvalued?
I wouldn't say overvalued. I think we've just hit that peak. Don't expect to see further massive price appreciation in villa and townhouse segment. Forget the palm. Let's talk about the mass market, your ranches, your meadows, springs, those areas. Small appreciation now, single digit above last sales or a general tapering off. Don't expect to see 5-10% on sales that happened a month, 2 months, 3 months ago.
Okay, well, we're talking data here, but what about emotion? For these owners who are being told, yeah, the market's buoyant, it's brilliant, come on, from the brokers who are knocking on their doors and asking them if they want to sell, will they accept that?
It's simple. You want to try it? Put your property in the market. Put it in a price that works for you. And if you don't get offers and it doesn't move with a number of weeks in this market, it's simple. It's overpriced.
But it's a bad look to then start bringing the price down for those who are watching the property portals.
Always hesitant with the portals. There's a lot of inventory that's on there, a lot of inventory by multiple brokers. If it's sitting on the portals for too long, there's either something wrong with it, and most of the time it's price. It just might need a price reduction. Or if you don't need to sell, it's not the time to test the market at a price.
So let's have a look at what we are seeing. You're saying the early signs of cooling, it's not bad, it's just not going as fast. Is this a blip or is this a trend?
I hope it's a trend. Right? So if we look at the last market recovery, on the pace of recovery, we're about the same. Right? So it's gone up 19%, roughly the same for the first 12-month period of the past recovery. Then we only had about another 11 months after that in the last recovery. I don't want to see that happen. In the last recovery, prices started to go 2-3% month on month. What I'd love to see now is a drawn-out recovery, low 0.5% month-on-month increases, anything below 1%, and we see that stretch out for another 18, 24 months. That's the recovery we want. We don't want one that runs away with itself and then just goes to something that could potentially burst.
We've been talking about villas and townhouses here, and we've been talking about villas and townhouses for the last year because that's been the most interesting segment. What about apartments?
So I think you're going to keep continuing to talk about villas and townhouses, what developers are now switching towards. Apartments, key areas are seeing growth and recovery come in. So your marinas, Business Bay, downtown, even your JVCs and JLT, you're now starting to see a little bit of a price appreciation there. There's just a lot of inventory. If you look at the makeup of Dubai, about 70% of it's apartments. Right? The demand right now has switched to villas and townhouses. What I think is going to happen is around that 1 to 3 million price point during Expo, developers are going to target selling that inventory they still have in their books. And I think your other buyers that can't find a villa and townhouse now that's ready are going to switch to these massive projects that developers are bringing to market. So continued pressure on apartments, except in certain key areas. There's probably going to be value there. And then watch the villa and townhouse segment.
Now, you say Expo. Explain that to me, because one of the things that I've never understood is the Expo effect on the property market. It's a 6-month event. I mean, we're having great fun, but no one's buying an apartment on the basis of something that's happening for 6 months.
No, and this started the hype about it 4 or 5 years ago when it was announced, and property prices went up. They shouldn't have. It doesn't make sense. The biggest benefit of Expo is a massive infrastructure project. We've already got the benefits from that. As far as property prices go, yes, right now, short-term rental market, there's some activity and things there. Where I see things happening now is Expo is designed to expose Dubai to the world and then to ultimately, hopefully, bring people here and increase population. I think what's going to happen during Expo is you're going to have those potential new investors come in. They're looking at properties. The sweet spot for that price point is probably going to be 1 to 3 million. And that's what's available now. Developers still have inventory, completed projects on their books. If they're smart, that's what they're going to be pushing and targeting those. So as a market-wide Expo effect, I don't expect to see one. It's a 6-month event. But as exposing people, giving them that first rung on the property ladder in Dubai, that first investment experience, that's where I think you're going to see the apartment market.
Okay, our time's ticking. Let's keep it short. We're talking about this in a low interest rate environment. What happens when that changes?
Oh, it's changing. Inflation's coming. Interest rates are going up. It's going to be sooner than people expect. Expect Q1, Q2 next year. What it will do is the market's really, it grew by first-time buyers and by end users. And if you look at mortgage transactions, they went through the roof. They're also tapering off. If interest rates change, that's going to change the dynamics of the monthly repayments. That's going to take some people out of the market of what they can afford on a monthly basis. It will inevitably help also slow down the market.
Very quickly before you go, real estate agents would tell us that it's the best time to buy and the best time to sell. Who's actually holding all the cards, Zhann, very quickly?
Always depends on your personal situation. The best time to sell is at the bottom of the market, and you never know you're there until you've passed it. It depends on what you want to do. If you need to move, then sell. If you want to test the market, put something there. If you're a buyer, buy what works for you. If it makes more sense over renting, now's the time to buy. If not, sit where you are.
Bit of sober grown-up advice in the property segment. Zhann shocking us all. The COO of Property Monitor, their monthly report will be out a little bit later, but he's given us the numbers first, and what they show is that we are seeing some early signs of cooling in the property sector here in Dubai. That is going to be good news for a lot of people. Still to come on the show this morning, we are going to be looking at what's happening down at the Air Show this morning. We're also going to be looking at Dubai's latest record, and this time it's for Rolls Royces.
This is the Business Breakfast on Dubai.